Yeah, I'm ready.
Are we live?
Yeah, we're live.
Just dawned on me. Can you believe they let us have a live show?
That's
Our
that's
history and saying inappropriate shit. It's
not smart. You almost heard me cussing up a storm because I thought I closed my trading program and I've got trades on. I'm like, what the?
I'm sure I can get you cussing up a storm too. Okay, so we have a great guest coming on. I'm going to intro in a second. Stocks rallied today. We just talked about it a little bit on the rundown. Let's hit it again. What do you think the main drivers are?
Two things. Number one, so we've got the semi-annual testimony before Congress that started today. And quite frankly, this is the stupid one because it's Congress. It's the House of Representatives. They get 3 minutes to ask questions, and they spend that time talking about affordable housing for LGBT. I don't want to go. They grandstand, right? They don't ask legitimate questions. They grandstand. They put forward their little political spin so they could get a quip for their campaigns. And then they go, do you think there's going to be a recession? And that's their question. And we get nothing. We get nothing at all. Tomorrow, though, the Senate tends to be a little bit more nuanced, so we could get something. So the statement that he came out with, the pre-printed statement, pre-released, whatever, the same one he's given the Senate tomorrow. And he said in there that it may be appropriate to cut rates twice this summer.
Yeah,
and I really think that's what it was.
A little bit more dovish.
Yeah.
Than what
certainly not hawkish.
Yeah,
certainly not hawkish.
And I do think it is not for nothing that the New York Community Bank thing is imploding. You had just told me that they received $1 billion cash infusion from Steve Mnuchin, but I still think they're a canary in a coal mine. Do you think the chairman is looking out at that landscape and saying to himself, crap, there could be some problems in banking?
Well, one of the idiot members of the House of Representatives actually asked if there was some sort of a crisis, and he said it wasn't enough to move the needle. I don't have the exact question or answer here, but I actually texted a friend of mine as I was telling you about the $1 billion led by former Treasury Secretary Mnuchin in the fundraising round. And he said it's an $8 billion net problem. So I don't know if 1 billion moves the needle much. He said he thinks, this is his opinion, his name is John DeSorga, if you disagree with him, 85 billion in loans probably marked to market at 65 billion. That's a big hole. We can't fill that with $1 billion.
No, it's a $2.5 billion hole that you can't fill with $1 billion.
Can't fill it.
Okay, so I've said before 1 million times, you may watch our podcasts. You may think that Bobby and I are dumb shits, but it's very difficult to argue the fact that we get really, really good guests, and we have another on today. We have Carley Garner of Carley Trading, who's an old friend. She's very, very bright, and she deserves to be listened to. Let's have Carley come on. So, Carley, first, the most important thing. I got into my studio, and the window, the sun was coming through. It was hotter than shit. So I ran in to change my shirt to a short sleeve shirt. And I think I grabbed one of my daughter's shirt. And it's absolutely skin tight. And then I thought, I'm doing a show with Bob Iacchino, and he always wears skin tight t-shirts. Right. So it's perfect.
This one is baggy.
Do you want to weigh in on that or no?
I'm pretty sure I wear the same size shirt as one of Jim's daughters. That's by design.
How is living in Las Vegas? Do you like it?
I absolutely love Las Vegas. I'm a lifer. I actually catch a lot of flack from my friends. Like, I've been here since '99, and my group of friends have been here basically that long or longer. And they're kind of upset at me because I brag about Las Vegas on social media, and I have been doing it for almost 20 years. And suddenly we've gone from a population of like 750,000 to 3 million. I'm not saying I did it myself, but I probably should have kept my mouth shut because it's ruined it a little bit. I still love it, but love it a little less. It's too crowded now.
You're a weekend in Las Vegas. In my mind, like maybe some mountain biking, maybe some hiking, then maybe even down occasionally to one of the hotels, see a show or go to the restaurants in the heart of it. Am I hitting it on the head or no?
You're absolutely right. Most people think of Vegas, they think of gambling and shows, and it's fine. I gamble for a living in the markets, or at least my profession is gambling. So I really don't I don't touch the casinos. And I rarely go to the Strip unless we have visitors in town. The really great places in Vegas are up on the mountain. I can be hiking and the mountain in the middle of nowhere in like 20 minutes, and it's beautiful.
So a friend of
Um,
mine who used to
mhm,
live in Chicago, Carly, and moved to Las Vegas,
yeah,
told me a long time ago. He said, "Think of it like this." He said, "The Strip is like deep dish pizza." He goes, "As a native Chicagoan, how often would
yeah,
you eat deep dish pizza?" I'm like,
right.
"Probably once every 3, 4 months." He goes, "That's the Strip to somebody who lives in Las Vegas. They go every once in a while. If they have somebody in town, they take their friends." That accurate? He wasn't a lifer.
That's 100% accurate. The rest of us stay in the outskirts. It's super quiet. It's actually, I don't even know if it's appropriate to mention this, and most people would never guess it, but Las Vegas is actually maybe not majority, but close LDS population, so Mormons. So it's not like it might be wild and crazy in the Strip, but outskirts is boring. It's suburban life. It's really, really quiet. Nothing going on. It's perfect.
I like boring. My last question about Las Vegas living. It's let's say it's late January. Do you still have your pool up and running?
So pool season is basically about April through September, October. We have a heater, so we keep it heated. The casinos keep it open a little longer than that, but the reality is it's no fun to get out of the pool and freeze to death. And so, but yeah, honestly, we're barbecuing all year round. We complain if it rains. It rains like 10 days a year, and we get all upset because it ruined our plans. But in the overall scheme of things, we have it pretty good.
That sounds awesome. By the
Yeah,
way, all
great.
these, like I go to Arizona on occasion, and what you call it, Las Vegas is the same. My property in Colorado is right at the mouth of the Colorado River, so that's my water. When you drink that water, that's my water.
Yeah.
I'm sending down to you.
Well,
Okay,
when
and I
you
want you to
flush
have.
your toilet, it comes to us as well.
Yeah,
Thank you.
that's probably true
Ah,
as
she's
well.
ready for that one.
Carly nailed that one. So okay, so you heard what Bobby and I were talking about in the equity markets, right?
Mm,
Would you
I did.
like to weigh in on that? What do you? This is somewhat of an improbable run. Thoughts?
It's improbable. It's, in my opinion, illogical, and I believe it's ultimately going to be unsustainable. I see a lot of things that remind me of 2021, and we all know what happened in 2021. Once, once the last buyer was in, the rug was pulled, and we saw assets like Bitcoin, Tesla stock, Nasdaq, S&P, everything just kind of fall apart with it. Wasn't the end of the world. Markets need to correct. That's healthy. And so I'm not looking for big bear market, anything like that. But I think just a really nice, healthy correction is probably way overdue. I see way too much froth in some of the high flying assets, and it makes me a little uncomfortable.
See, that's what like I think the same.
Yeah.
And I think what's going to happen, here's what I predict for the next quarter is that we just talked about the fact, did we talk about the Magnificent Seven and how there's only really like four left after Apple and Google have kind of gotten knocked. Nvidia's kind of marching to its own drum. I think one more slip, one more break below support of either a Microsoft or a Google could start the whole thing. And I believe like there's going to a 10% correction in the cards. That's going to be the thing that moves the Fed to actually start the easing that they've been kind of hinting at and flirting with for the last year. Does that sound reasonable to you?
Well, I hope you're right, because my investment portfolios are positioned for just that. I actually just tweeted. This isn't speculative. This is like long-term retirement account stuff, but I'm actually gone down. I think my stock allocation is like 17, 18% in
Oh,
the
wow.
bonds. So I've gotten really, really cautious. Now I might regret that. I might miss out on who knows what. But when I get to a situation where I start checking my long-term investment accounts and it feels too good to be true, I've learned the hard way enough to know that that's when you start hitting the brakes.
So
Something's
I like I told Bobby in every up day, I've been selling a put to buy 2 or 3 puts underneath it.
Love
So
it.
I have on, and then as we rally, I occasionally
Love
will buy back the top put and just leave myself. So I'm still invested pretty well. And if we get my 10% pullback, my what do we call that? My gamma explodes. So I'm looking forward to that. Yeah.
Yeah. We've been encouraging our clients, people that have investment portfolios that maybe aren't in retirement accounts, maybe they're cash accounts and they're a little more nimble, but they don't want to miss out on the upside. They don't want to miss out on dividend income, and they don't want to create a taxable event. So what we're encouraging them to do is sell call options against the S&P 500, and then use the proceeds to buy puts. So just hypothetically, you could probably sell something like a June 50, I'm just kind of making numbers up.
Sure.
June 5400 call, and then use the proceeds to maybe buy like a 4700 put. It's free insurance. You're basically, your portfolio will continue to gain up to 5,400. Above that, you lose upside potential in your portfolio. But it covers about $260,000 worth of stock under 4,700. So you put a floor on it without really even paying anything other than having money sitting in a margin account.
So I'm looking at a NASDAQ that right now is we're still open, right? No, we're closed. NASDAQ finished up a little bit more than 0.5%, right? About 0.6 on the future side. Magnificent Seven, Microsoft down 16 basis points. Does everybody know? I had somebody tell me recently, don't say basis points because like not everybody knows what that is. 10 basis points is 0.1%, everybody. 50 basis point is 0.5%. So as
I use them in bonds, I don't use them in stocks.
Yeah, like here's why I use them. I don't know what to say. Microsoft is down 0.16% on the day.
Okay.
So, well, 16 basis points easier for me. Anyway, Apple down just short of 0.6%. Amazon down a little more than 1/3%. Google down just short of 1%. Tesla down 2.3%. Meta up 1.1%. Nvidia up 3.22%. NASDAQ up 0.5%. Actually, more than that, just short of 0.6%. Do we care, Carley, about the Magnificent Seven? Like, is it Nvidia and just the rest of the tech stop holding it up anymore? Or has the breadth gotten better? Do you look at that kind of thing?
I don't look at it that closely because I'm on the futures side of
Right.
things, but I do pay attention to it when things get really out of whack. And so, again, I'm going to bring back the example of 2021. In 2021, it was Tesla that was just roaring higher, bringing everything else up with it. And now we're seeing the exact same thing in Nvidia. And we all know what happened at Tesla, and probably I know Nvidia. Right now you can't tell the Nvidia bulls that it's even possible that it becomes the next Tesla, but the odds are it probably will at some point. And this probably sounds silly, but I've been doing this long enough to realize that sometimes really silly lines on charts work way better than you could possibly imagine. If you draw a high on NASDAQ 100, which I like to use, first of all, I'm a futures broker, so I look at futures, not stocks, but it trades 24 hours a day or 23 hours a day as opposed to just part of the day. So it's a much clearer chart to me. If you draw a high from the 2000 high, so the dot-com bubble, through the 2021 high to today, it's about 18,000 in the NASDAQ 100. Sorry about that. So it basically comes in right around 18,000, right around where we are. So this is a really pivotal price point. I mean, maybe it just breaks out and keeps going, but I have serious doubts. If we close below 18,000 this week, I suspect we start to get really heavy. And that NVIDIA stock probably eventually, instead of taking us up, it probably takes us down.
It's interesting. This is sort of the same opinion that Mike Arnold had, where he's sort of your counterpart on the technical analysis side. He always pulls up charts and stuff, and he's actually on next week. And he kind of feels the same thing, but he feels like it's going to be sort of a rotational buy in the short term. Do you agree, or do you think Jimmy's looking for about 10% lower?
I think 10% is a good target. In fact, it's kind of what I have in mind. What I can say is we're going into expiration of the March futures next week, and I can't explain it. There's no good logical reason why, but generally what happens is you get some sort of low, like on the Wednesday or Thursday before expiration, so today. And then it usually rallies through the expiration of the contract. It's like a big short squeeze. And then once we finally get the March contract off the board, the market actually usually runs out of steam and gets a little more selling coming in. And so I suspect we probably see one more new high here over the next week or so, and then we start to really struggle.
So can we switch over to things like Bitcoin, gold, crude?
Sure.
Which of those ones would you like to discuss?
Let's talk about Bitcoin.
Let's talk about Bitcoin, because every show I've been on for the last, call it 16 months, I've explained my thesis in Bitcoin and why I'm long and increasing my longs for 16 months. And that is that BlackRock's buying Bitcoin. BlackRock likes it. They are my lord, my overlord. I will just piggyback them.
Two of Jimmy's best trades have been piggybacking off of people. It's been really successful.
Nancy Pelosi and BlackRock have made me lots of money. But anyway, so what is the thesis of BlackRock? And do you believe what I believe, that it's a vote of no confidence in the stewardship of our currency?
I mean, I think it is all of those things, but I'm actually paying attention to something a little different. So when Bitcoin ETFs were approved. It was a little bit, everybody expected Bitcoin to just off the gun take off, and it didn't. It's been kind of a delayed reaction. But I think what we're seeing is now it's so much easier for everybody that heard about Bitcoin for the last, several years and kind of had FOMO, so much easier for them to get involved because all they have to have is a stock account. They don't have to open a futures account or have a crypto wallet or anything like that. So it's so much more accessible to everybody, and there's just money flowing in. The problem is, I to me, it's kind of a mirror image of what we saw in wheat futures a couple of years ago when Russia invaded Ukraine. Suddenly, everybody and their dog wanted to buy wheat, but they couldn't. They didn't have a futures account, so they did it through the wheat ETF. Every kid with a cell phone had, their heat maps were pinging them, telling them to buy wheat ETF, and they did. But the wheat market couldn't absorb all of the cash that was coming in. So it basically just blew up the entire market. Wheat went from $7 to $14, 6 or 7 limit up days in there. Very few people were able to trade in and out, get out of shorts, get into longs, do what they needed to do. And by the time the ETF had gotten done with the market, and all the last buyers were in, we dropped from $14 to $5. So I have a feeling the ETFs are going to have a similar effect on Bitcoin. But and we've seen it in the crude oil ETF did the same thing. USO, when crude went negative a few years ago, most of that was the ETF blowing up. So I'm not a really big fan of ETF money coming into the futures markets because I just don't think there's enough liquidity to absorb it.
So based on that, do you see that on the chart? And the reason I ask is because obviously that's where you do the bulk of your work, right? Is the charting.
Mhm.
And do you see that forming on the chart? The reason I ask is because when I look at the amount of money going into the ETFs, and I
Mhm.
think that it's still such a small fraction of the investment community that's looking at this as an asset. You still have people, mine and Jim's age and older, that are saying
Mhm.
this thing is nothing. It's air. It's made up.
Yep.
It's BS.
Yep.
It's bullshit. And I mean, I don't know if they're right or not. I have my own
Yeah.
thesis about it. But do you see that forming on the chart yet, or are you looking to see if it does form?
I mean, the chart, if you look at a chart, it basically looks like a double top. I wouldn't be shocked. I'm not going to try to call the top in
Of course
Bitcoin.
not.
I am not,
I
in
guess
my
my
opinion,
question is,
yeah.
do you have a short on the chart or not yet?
The chart says it's a much better sell than a buy. So if you put a gun to my head, I would say I'd be a bear. That said, you know, it's going to take a long time for the ETF and all the influx of money to work itself out. I don't know if does that mean we top out at 70,000 or 100,000? I have no idea. But what I do know is like some of these ETFs, what they're doing is they're taking investor money, they're pooling it, and they're buying futures contracts with it. Well, I don't know if you saw how many futures contracts in Bitcoin were traded before the ETFs, but it was like very few. I mean, small numbers of contracts going through. Well, suddenly we've got all of this crazy volume. Going back to the wheat example, when everyone in the world decided they wanted to be long commodities and specifically long wheat and crude oil because of the Russian invasion, we saw the wheat ETF go from like, I think it was trading like 1 million shares a week to like 50 million a week. So these markets just honestly, I wish they could, but they just really just cannot handle the volume of money that's being thrown at it.
Can I pivot to crude oil?
Yeah.
Okay, so I mentioned we recorded with Mike Arnold yesterday. That'll be released
Mhm.
next week. And I gave Jimmy and Mike my thesis on the fundamental side of why I might want to be long crude oil. Okay.
Okay. All right.
Skip that because I have my own reason. The
Uh-huh.
technical side, I thought the last couple of days was a retest, and I asked Mike what he thought, and he thought, yeah, it was a classic breakout and retest. What do you think of the crude oil chart? Because I think I'm going long. I've been waiting for this show to go long, and I'm not putting it on you. You're not recommending it. You're not, you're a broker, and you
Right.
have your restrictions. But I'm about to go long crude oil. I don't think there's very much anybody could say to stop me from doing that. But what do you see on the chart?
I'm not going to try to stop you. So I've been posting on social media a monthly chart of crude oil for the last, well, I mean, indefinitely, forever I have been. But specifically, what we're looking at is there's a really long-term trend line. that comes in around $68, $70, and we've continually held that. We've only broken that trend line over the last handful of years once, and that was during COVID. And I think, all bets were off during COVID, so I'm not even going to count it.
Yeah.
So it's really, really solid at 68, 70. We've held that. Now we're starting to look at the top of the range. The top of the range on that same chart is close to $100 a barrel. So I personally think that's where we're going. If you look at a daily chart, there's going to be some resistance in the low 80s, maybe 80, 81. That's a downtrend line, but I'm with you. I think we break out of that, and I think we're looking at maybe mid 90s to maybe even $100.
Bobby, do you have a fundamental thesis to back that up? Carly, you don't deal as
I
much
do.
with fundamentals for these things, right?
I mean, I've watched the fundamentals, but I'm making most of my analysis decisions
Bobby and I
based
kind
on
of the
chart.
same way.
Yeah, it's the same as us. Like fundamentals is almost sort of a hobby, right? I mean, if we
Yeah.
meet in a bar, and I have gotten drunk with Carly, although I was drunk, she wasn't as drunk. We talk about this stuff and we're like, this is absolutely going to happen. And then we
Yeah.
all kind of go back to our charts as our pacifier to
Right.
kind of say, nah, I better not do it just yet, right? To make sure that we stay alive. But yeah, I do. And, I mentioned this on a show. I have a Bloomberg interview tomorrow. They're asking me to talk about it. I'll talk about it tomorrow on the Bloomberg interview. OPEC is predictable. Okay. OPEC plus is predictable. And what's going on in the US is readable, right? So OPEC is struggling to put out a public date for their next meeting, which is supposed to happen next week. They may have done it today and I didn't see it. So I want to throw that disclaimer out there. Usually when they're doing that, there's dissension, okay? And that to me means more cuts or at least an extension of the current cuts that expire in April. And the reason I say that is because it's very easy for Saudi Arabia to survive, right? They have tons and tons and tons of cash. And some of the newer producers that are in OPEC, some of the smaller producers rely on that money. In the plus side of things, Russia needs that money. They're in a war, right? And they're not necessarily behind the idea of cuts. So what I think is going on, and this is a wild prediction that probably won't come true exactly as I'm laying it out, but they're either going to extend cuts or add to cuts, meaning produce less, and then they're going to allow certain countries to just cheat and not worry about it, right? That's number one. Number two, China really underwhelmed the world with their 5% growth target because they didn't give any details. That's a GDP growth target because they didn't give any details as to how they were going to get there, right? Which means the stimulus side from the People's Bank of China is wide open to do crazy shit, right? And whether that's going to work or not, I don't know. By the way, sidebar, Jimmy, I wanted the goal of this show to get Carly to say one of the 7 words from George Carlin.
George Carlin, she never can.
She'll
We've
never
worked
do
on
it.
Carly before.
I was going to bet you we could get her to do it, and then I decided
She
that's
can't
the easy
be
way to lose
poisoned.
money. From that perspective, I think that there is going to be slightly more demand coming into the market, and we are seeing strength in the U.S. economy. Now, I just saw somebody just sent me. You guys know who Walter Bloomberg is on Twitter?
Yeah.
Mm-hmm.
Powell. Somebody just sent me this tweet, which I don't think you guys can see. Powell, we are not looking for inflation to go all the way down to 2%, but we do need more evidence. Jimmy, how many times have we said they're going to adopt a higher inflation target?
The whole time. For like
the
a year and a half.
time we've been saying.
Yeah.
So,
particularly when you throw in the fact that the federal government is spending money like drunken sailors, it is going to be very difficult to get down to a 2% target.
all of this backs Carly's thesis that trend line is going to hold again, because that's just going to be a couple of rate cuts, China stimulus, the economy's ramping up, and they're not going to hike rates and they're not going to get inflation down to 2%. So I have a tighter target than Carly, but I think I'm going to move it up now.
What's the trade though, Bobby, or actually Carly? You want to call fly in this situation to target a specific level? What duration? If you're not comfortable saying that's just me asking. This is not a recommendation for anybody. We don't know what your depth of your pockets or your risk tolerance is, but is there a way you'd look at it?
The thing is, we're a little tricky here because we're up against resistance. I probably wouldn't touch it at these prices unless we get some conclusion above 82 or not. In a perfect world, I would love to see it drop back into the low 70s, maybe even mid 70s. I'd be willing to be more aggressive. What we've been doing is every large dip in oil, we've been kind of recommending our clients do something like buy call spreads and then sell puts to pay for it. So pretty aggressive on a risk side. But again, we're feel pretty good about the $70, $68 holding in the long run. And so we're not too worried about selling puts under those prices to finance any calls that we're buying.
The puts, just naked puts or put spreads?
Naked puts, believe it or not.
I
Yeah,
like it.
it's
Yeah.
kind of scary sometimes, but
No. I think the level. I think it's not a bad play. I'm not. I'm kind of for it. Bob.
I just got a text from a friend of the show, Tim McLean, who said he just got the same tweet from somebody by Walter Bloomberg. And I got to ask him, is it platinum or uranium you're in? I want to ask Carley if she's looking at either one of those.
honestly, we don't really do much with those. We kind of focus on more
How
liquid
about,
and option markets, so we don't watch those that closely.
do you look at any of the industrial metals at all? You looking at copper at
Uh,
all?
Copper,
Okay,
we
let's
do
talk
look
about
at copper pretty closely. Mhm.
what are you
Copper's
seeing
got a
there?
level. You want my thesis in copper? Then I want to hear what you think about it. Is that the
Let's
fact
hear
that
it.
it's hung in and coiled the way it has, despite the fact that China has been floundering as they have? Is it foundering or floundering? Whatever the word is.
It's floundering.
So anyway, so China's giving no help to copper, and copper still hasn't sold off. I think if it trades above 400, I think it's going to be off to the races. And I do have stops. It's to buy one of the names that I don't that tracks copper pretty closely, but I don't deal in the equity names. But is that what you're thinking of copper too? Are you looking for an upside break at some point in time?
I am. I'm bullish copper. The problem is with copper, it becomes very highlighted or very correlated, I should say, with the stock market. And because I think the stock market might have a short-term blip, I think it might pull copper down temporarily with it. And so we're kind of waiting in copper. I wouldn't play the upside from these levels, but if we get a nice dip, I'd be willing to do so.
Bob, what do you think?
So I think copper's going higher. I do. It's a funny thing. Hamilton Insurance Group has the ticker symbol HG. So one day I was going, let me take a look at copper. And I very lazily put in HG and I got Hamilton Insurance Group and the chart looked great. And
So
I
you're
bought
long
copper,
Hamilton Insurance Group.
and I bought copper on the
Oh.
future side of things because it was a different charting platform. And copper went up. So I was like, that Hamilton Insurance Group correlates to copper. It doesn't, by the way. So nobody track Hamilton and buy copper. They don't correlate at all. They're literally, it's like a 0.12 correlation. It's nowhere in there. I think it doesn't. I think it reacted very similar, Carley, to gold, where somebody asked us about gold recently. Jimmy, you and I were on a show. I don't remember what that was. It was the Money Show guys. We were on their show and they asked us both what we thought about gold. And Jimmy and I both expressed that gold is holding in when it should be going a lot lower because at that point, the 10-year had gone back up to like 433 on the yield side.
Mhm.
Copper seems to be doing the same thing. So what are your thoughts on gold? It made a new high today, right?
It did. I think that fifth time is the charm for gold. Gold's been trying to break above 2100 for 4 years. It's just been trading sideways. And we've gone through all these narratives that the fundamentalists say should have pushed gold higher. I mean, we had inflation, not only inflation, but historic inflation. We've had wars, all these things, and gold still didn't manage to make any headway. But gold's a type of market that goes nowhere until everybody throws in the towel and basically forgets about it, and then it makes its move. And I think that's exactly what happened. Everyone was watching Bitcoin and Nvidia, and meanwhile, gold's making all the new all-time highs. I actually think gold has a chance at seeing 2,500, 2,600. I think we're going to get kind of a repeat of the 2010 rally where it just keeps melting higher. The 2010 rally occurred, 2 or 3 years after the financial crisis, so it makes sense. For gold to make its move after we've worked our way through first COVID and then the Ukraine war and all that kind of chaos. I think that now it's time for gold to make its move. So,
by the way, real quick, Jimmy, Global Connections public company is GC. It's traded on the Thailand Securities Exchange. So that's probably not one that's going to trick me into buying more gold. But
Good. Hold on, Bobby. You asked the next question. I think my dog is in a dog fight out front.
yeah, so I have so it's probably about 6-8 months ago. I went and sold one gold coin, one American Eagle gold coin in a shop that's down here in Florida. And I was sitting there with a guy who was selling a bunch of them. And I told him, he goes, you're only selling one, huh? I go, yeah, I mean, I got a bunch of these here. And our normal disclaimer, Jimmy and I both have gold in the house and we have dogs and guns. So there you go.
Yep.
But I sold one and the guy says to me, you better get rid of all of them. And I said, I got 2,800 by the end of 2025 in gold. Is that nuts?
no, absolutely not. Not at all.
I hope he's watching this.
No. I mean, I'm not a gold bug. I'm not,
Neither am I.
gold is a really, really tough asset. If you look at the long-term charts, It's made like if you've held it for 20 years, you've probably done very well, but you have to have a lot of patience to make any money in gold. It is super tough, and I'd say, unfortunately, most short-term traders lose money in gold as opposed to make money. So it takes some patience for sure.
So the gold thesis, and this is a question for both of you because I definitely want your input too, Bobby, is that I think that all of a sudden within the last couple of weeks, the market has noticed the $34.4 trillion debt. The fact that it is climbing exponentially, the fact that debt service is now bigger expenditure than defense spending. I think that it's a big deal. And I think if Republicans take over at the end of the year, I'm not sure they have the nards to pull back all that spending. There it is. There's you Bobby smile. I'm trying to bring that word back, but from the 80s.
That's a Midwestern 80s word.
But we're bringing it back. But anyway, I'm not sure they have what it takes to cut the spending once people are used to it. Where does this all go to? Anyway, Carley.
Well, I mean, the reality is the U.S. printed more money in the last handful of years than literally it ever has, and there's still a lot of money out there just searching for homes. Sometimes it's as simple as that. And so when you look at the assets that you can put money to work in, real estate's really expensive. Stock markets seems overvalued. Bitcoin's already made its move. So I mean, where are you going to go? Treasuries, in my opinion, or maybe even gold.
Okay, so that actually makes sense, Bobby. But by the way, she looked at it totally different than me. I was thinking of it like a panic because they're spending so much. She flipped it to they're just adding liquidity to the market, and not necessarily that the whole thing's going to implode, but that there's excess liquidity. Which way do you go?
Bob. You talking about me?
Yeah, you. Well, we've really come off the rails. It was very disappointed, clumsy.
We can change topics.
Listen, if we're talking about in the context of the tweet we just got, right? Honestly, I want to drop all that stuff and talk about how political of a comment that is. I mean, and I don't know where it came. I mean, Walter Bloomberg on Twitter, on X, that's, if you guys don't follow him, that is a pretty reliable macroeconomic follow. One time I actually said to him, where are you getting this? He tweeted something about the ECB. And I said, where are you getting this quote from? He goes, I'm in the room with Lagarde. Oh, okay. That's pretty reliable, because I'm a journalist in the room. I'm like, don't I feel like a dumb shit? But he's a really good follow. So I assume that's something that actually came out of the Q&A or is something that Powell actually said. I'm going to go on record as saying I believe that's something he already said.
And you think it reflects politics is what you're saying?
I do. I 100% do, because there has been a concerted effort by Fed speakers over the last 2 years to say 2% is our target. And I think the loudest voice on that was Jerome Powell, right? So as much as I like to look at things and say they're overvalued, I'm looking at gold here, right? Looking at the daily gold chart on my left, the gold futures for anybody who wants to pull up a gold chart while we're doing this. And it looks like a mini NVIDIA to me right now. And when I see things like that, I just, as a habit, I like to sell calls. I like to buy put spreads. I like to take profits. I don't want to sell gold. For me, a longer term holding gold is physical and a trading asset is futures. I don't do the GLD. I don't do gold ETFs. I do futures. And I look at these kinds of things and I look at the US stock market and I think the same thing. And I think, how does anyone think that vol is going to go lower with that kind of a statement in the overall equity markets? So, I look at it from a perspective as the market, the general market structure cracks when you have this kind of liquidity going into the system from the Federal Reserve, but it doesn't crack overnight. It cracks over a matter of decades. So I'm not sure what to think of that at all. That was a statement. There was no question there at all, was there? What do you think of natural gas, Carley? There's my question based on all of that.
Okay, that's
what do you think of natural gas?
Yeah. All right. So obviously, a year and a half, 2 years ago, natural gas was trading $8, $10. The consensus was we're going to 20 because nat gas in Europe was $20. Everything, all the fundamentals were pointing higher, which is why I'm not a big fundamental fan, by the way. By the time the fundamentals are the main story, usually the market's done. So nobody was looking for $1.50 natural gas, but yet here we are. And I think we're kind of in the reason I mentioned that is I think we're in the exact opposite scenario. Now we're at $1.50 and you can't find any bullish stories. Nobody thinks nat gas can go over 250. I actually think this is probably a time to be a bull. Natural gas hasn't stayed below $2 for any length of time historically. Doesn't mean we can't retest lows from a few weeks ago. Doesn't mean we're just going to go straight up. But I'd say we're going into a period. If you look at a very long-term chart, before fracking, natural gas was just off the chains volatile. It's the epitome of a boom and bust commodity. I mean, it has really spectacular rallies and then pathetic declines. But we went into a quiet period between like 2010 and 2020, where we basically did $2 to $4. And I think we're going into something like that. So I think I'm bullish nat gas under $2, but I don't think we're going to see $7, $8 again. I think we're looking at 4, maybe 5 if we're lucky, if fundamentals come around. Natural gas is a very well supplied market. And until the US, both infrastructure wise and political wise, can get their stuff together as far as exporting it efficiently, it's going to be really tough to hold high prices also.
So am I hearing buying like the 2-3 call spread to sell maybe the $1.50 put? Does that seem like a trade you'd do?
That seems like exactly the trade we do. Yes, that's exactly how we do it. Right now, we're kind of hoping we get one more sell off so that we get an opportunity to do that at better prices, but that would be exactly what we would look to do.
Okay, so now I have a question about my Bitcoin. We joke about this because I started buying it, a little more aggressively a year and a half ago, 18 months ago. And Bobby, I always joke, well, it's a small position. It doesn't keep me up at night. Well, it's not a small position anymore because by virtue of the fact that they've gone through the roof. But I don't want to sell it. I don't want to have tax liability. So it buys me like I was your client of what to do to take money. Would you just recommend a collar of some sort using the features? How would you do it?
Yeah. You said you hold the future or you've got the
actual Bitcoin?
Oh, okay.
Yeah.
Well, the thing is, it's really difficult to do. This is what makes Bitcoin really, really hard. So there are micro futures, and then there's just regular Bitcoin futures that you can use in the futures market. There are options written against those, but the options have two problems. Liquidity is a huge problem, and the second thing is most FCMs, basically brokerage firms, have restrictions on trading them. So even if you had owned a cash market Bitcoin and you wanted to do some sort of collar, like sell a call, buy a put type of strategy, you might have a hard time finding a brokerage that would let you do that trade. We can get it done because we specialize, we're a smaller shop, and we have our good relationships with our risk managers. But the average person it'd probably be impossible to do that. Brokerage firms I don't think people realize this actually. Most brokerages require special permissions even to buy or sell the futures of Bitcoin because they know it's an intrinsic asset. The asset has basically zero intrinsic value. So it could go to zero in 5 seconds. It's not like, although crude oil, we did see crude oil drop from like 15 to negative. So anything could happen. But for whatever reason, they've decided Bitcoin is not for everybody and they really have strict restrictions on it. So I would advise you to maybe do a collar. Yes, absolutely. But it wouldn't be that easy to get it done logistically. Their bid-ask spreads are wide, but we could probably figure it out.
Can you short those new ETFs? Is those easy short or no?
So we don't deal with ETFs at all. We only do futures. So I don't know that's a good question. My guess is probably not. I can't imagine brokerages taking on that much risk. Like people don't understand. I know like a few years ago when GameStop was all the rage and everyone blamed the brokerages for shutting off trading. I think people don't understand just how much risk a brokerage takes, especially if you're talking about leverage. So even people that are buying GameStop calls, somebody's selling that call to them. So the brokerage has risk somewhere. And it's just not as simple as people make it out to be. As a futures broker, I have a lot of risk. When I take a client on, I'm charging them commission basically for accepting the risk of their trades. Sometimes that doesn't work out so well. I've had situations where clients have lost more money than they had on deposit, and I'm wiring a couple $100,000. So it's a really tough game. So be nice to your broker.
Yeah, Bobby and I've been brokers too. We know that game.
Yeah.
Bobby?
Yeah.
I mean, be careful about that tax liability. I had a friend that rode Bitcoin down from 66,000 to about 24,000, and then sold it there because you didn't want to have a tax liability at 60.
Okay, so what you're hitting on is something that's very, very important. My disdain for the government and disdain for taxes could, in fact, color my actual trading decisions. And then, like, we laugh, and I'm laughing inside too, but I'm actually, that's serious. So I have to get over that, right? Or else figure out a way.
There's a lot of people like that. Go ahead, Carley.
Yeah, no, I was just gonna say that reminds me. I remember distinctively in 2021 having multiple conversations, not just one. So many people were like, "Yeah, I don't want to pay taxes, so I'm not going to sell." So they held on to basically all these tech stocks and all these cryptos, for 20, 40, 50% because they didn't want to pay a few dollars in taxes. I get it. I hate paying taxes too, but
whenever and this is Bitcoin stopped being a speculative thing to me on this last rally up. But when it's a speculative trade like that, I always anticipate that I'm going to have a taxable event because I anticipate I'm going to make money on it.
Yeah.
Well, that's kind of the way I look at it. But that's the fight. I know people who do that with real estate. They do the 1031 exchanges because they don't want to pay the taxes and they don't really want the real estate. They just don't want to pay the taxes. So Carley, how do you? So you are
this year that we got to pay capital gains tax on. Oh, I just remembered that. Yeah,
it's going to take us in a completely different direction. Carley, I wanted to ask you. You're Jim Cramer's favorite chartist, so to speak. How do you manage that? Because he's a stock show, and you're a futures person. What? How do the conversations go?
I don't know. I've been working with Jim for, 15 years probably now, almost. And it started with me just writing. He used to own thestreet.com, and I started contributing articles, and then he noticed something I wrote, and then we just kind of been talking ever since. And the first conversation was a little awkward because he's like, "Can you chart Apple? Can you chart, these stocks?" And I go, "Actually, I could, but I'm not going to be very good at it. Let me tell you what I can chart." And then from then on, we kind of figured each other out, and it's worked. Yeah, it's been great.
So I find that interesting. Why can't you?
Well, I can, but
why
the
do you
thing is,
think you wouldn't be good at it?
Because when I look at a futures chart, I'm looking at indicators, lines, all those things, but I also know in the back of my head, well, I've seen this before, or, and I know what the COT report looks like. I know what the seasonals look like. So I'm not just looking at the chart. I'm looking at all kinds of different things that I'm familiar with and I have experience with. Whereas if I looked at an Apple chart, I might be able to pick the right direction, but the odds are going to be a lot slimmer that I'd be right because I'm not using peripheral information.
So there's outside stuff that you add into your analysis that isn't necessarily stock specific or available even.
Yeah.
All right. So what do you like when you set up an options trade? You and Jimmy are talking about collars, and what is it that you're generally looking for? Is it volatility based, or what's your process for selecting an option trade for anything that you cover?
So first thing I look at is the CME Group has a really great section on their website that shows the volatility for each commodity market. So a lot of people are familiar with the VIX, which is the implied volatility for S&P 500 options. Most people don't know that there are VIX-like figures for crude oil, natural gas, all of the commodities. They don't call it the VIX because VIX is trademarked, but it's basically the same thing. And you can pull up charts on the CME Group's website and just see whether volatility is high or low. I make it kind of a rule of thumb.
C-vol stuff?
Yeah, C-vol. Yep, exactly. Okay. That's exactly what I'm talking about. So I try to make and I've learned some really tough lessons over the years. I think all of us have. And so we've kind of learned if volatility is low, we're only buying options. We might be buying call spreads, put spreads, buying calls or puts outright. We're not touching the naked shorts on anything because low volatility always turns into high volatility eventually. And when you least expect it, and if you're in and you're buried, it's hard to recover from that. So the first thing we look at is make sure that it's appropriate to have certain option strategies on. But we're basically just, the idea is trying to be patient, looking for signals on weekly or monthly charts, and then making sure there's enough premium in there to do it, and we go for it. Sometimes it works, sometimes it doesn't. In the S&P, we're underwater quite a bit on a trade that we'd recommended to our clients. It's basically a bear put spread. So we bought puts, but instead of spending thousands of dollars on an option that expires worthless, we sold calls and then sold puts also to pay for it. But as you can see, the S&P is kind of one direction nowadays. So that one's given us a little trouble. So it's not always perfect. But the idea of doing it that way, as opposed to just selling futures, is You don't have to worry about stops. Stops often, if you're buying a future or selling a future, there's a really good chance you get stopped out prematurely before the market has enough room to do what you need it to do. With options, you don't have to worry about stops. And there's more room for error. We can be like in some of the trades that we put together, we can be wrong. Like in crude oil, we can sometimes put spreads together, or we can be wrong by $10 and still not lose money. We basically just break even. In our S&P trade, we can be wrong by 250 points and not lose money as long as everything's, if we're not really wrong, that's where we get into trouble. And that sometimes we're really wrong.
You said something that jogged some. I was on a podcast with someone who's in finance, but not like into the trading part of it as much as we are. And he mentioned the 0 days stock expiration options that are all the rage, and the volumes of those things have gone up tremendously.
Yeah.
He was like, do you think it causes any sort of structural risks? I don't see the structural risks yet. To me, the more the retail crowd can understand options and understand what we do, and they can define their risks and not have to all panic at the same time. What should I be worried about with the explosion of 0 days to expiration?
What I worry about is I think those are really great tools. Like on the future side of things, the CME has options in the stock indices that expire every day. So Monday, Wednesday, Thursday, Friday. So they're the same thing as 0 day expirations in stocks. They're really great if you're using those to day trade from the long side. So if you think the market's going up and you buy a call option that expires today, perfect. Your risk is limited. It either happens or it doesn't, no big deal. And also you do get the benefit of, you don't have to worry about placing stops or anything, getting stopped out and all that kind of stuff. So I love that. But the problem I see is we tend to, just the way that our business is structured, we kind of cater to option traders and option sellers and option spread traders. What worries me is I see a lot of people that want to sell 0 day options, and that's a little sketchy. I mean, if we get think back in 2020, March of 2020, when COVID first broke out, I mean, we were getting 100 to 200, 250 days in the S&P. Someone trying to trade 0 day options or sell 0 day options, and that could be a problem, a big problem. So
no doubt. Bobby, what do you think?
Question for both of you guys. Actually, I'm asking you a question about the same thing. So somebody asked me recently, what's behind the popularity of these? And the only thing I could think of, so we used to tell people that if you're involved in trading for the juice, just put an amount that you're going to lose, because you're going to lose all of it. Like if that's the reason you're involved. And my opinion, when somebody said to me, why are the 0 DTEs so popular? I said, it's because of the juice. It's because of the thrill of it, which to me is the absolute wrong reason to get involved in active investing, active trading. What do you guys think? Do you think it is just sort of like greed and excitement? Or is there something else there? Is it so valuable that people are trying to figure out the way to trade it?
Can I take it
one of you?
Yeah. Because so I think one thing I'll disagree with you on is that you made it sound like the greed and the thrill is all bad. And I think it's mostly bad if that's why you're involved too. But I don't think it's all bad too. I know some pretty good traders who love the thrill of the kill, who love to hunt them down and pounce. And so I don't think it's all that bad. But I have nothing else to add to that. Carley?
Well, as a broker, I kind of get a front row seat to a lot of this stuff. I never encourage people to day trade or to highly leveraged trade, because the reality is almost all of them are going to lose money, and probably pretty quick. A lot of people come in, trade to the maximum leverage, blow out their account in a week. I mean, we don't encourage that. We don't really have that at our brokerage, but I know that that's what goes on, especially at the discount brokerages. So I think the 0 day options are basically attracting that crowd. And I can say, I live in Las Vegas. This is a gambling town. People come and gamble for recreation. So there's two types of gamblers, and this is the same whether you're talking about casinos or markets. Either you're doing it for entertainment, and that's fine as long as you can afford it. It's risk capital. It's not affecting your lifestyle. Fine. If it is affecting your lifestyle and ruining what you got going on at home, not fine. And so that's really the distinction. That's all I could say.
No, that actually makes a ton of sense. Can we hit one more market before we let you go? Because silver, I bought some silver I bought silver on gold's breakout, because I believe that there's a catch-up trade that's going to happen. Have you looked at that chart? What do you think of silver?
I have. Silver is silver is where hopes and dreams go to die. It is just an
Silver's
awful
That's a
market.
great way
It
to
is an
start my
awful.
conversation. Anyway,
I
It is so
really,
tough, man.
I totally dislike silver, but all I can say is anytime silver gets into like 18, $20, it's probably a place to consider speculative buying. I do think silver probably sees 30, $35 somewhere in there. I think if I'm right about gold, silver should see the mid 30s. I don't I don't think silver is going to retest. I don't know. I'm sure you guys are old enough to remember when silver took off to $50
I was
and there
long
was
quite a bit of silver when silver
yeah,
took
good
off
for
to
you.
$50. Yeah,
Um,
I
I
lost
don't think
most
we
of it
see
on the way
that.
back down. But go on.
Yeah.
You didn't
I
want
don't
to be
see I
taxed
don't
on it.
think we see that again, but the 30s are definitely doable. It's the kind of market if anyone decides to participate in silver, please make sure you take profits, have stops, protect yourself because it goes down faster than it goes up usually.
That makes sense.
Silver to me, I always call silver I just lost the guy's name. Who's the guy that had the big Ponzi scheme that was making 1% a month in options? That was I think he just died in prison.
Oh, the guy in London?
Madoff.
Oh,
Oh,
Madoff.
Madoff?
Yeah.
Yeah, to me, I call silver Bernie Madoff of the metals markets because people are always looking, they always want to dump all their money in silver. And every time, like as soon as I start paying attention to the gold silver ratio blowing out, I notice that the tightness of the ratio happens when gold either falls or gold silver catches up a little bit and then gold falls. Like that's the only time it seems to me that ratio comes in line,
Yeah.
So silver to me, when I start to want to get long silver, I start to want to take profits on gold. That's always sort of been the thing. I don't have any research
sense.
behind that.
Yeah, because the time where I made the time up to $50, I remember there was a huge catch-up element of it too. Like the divergence between gold and silver went on, and then boom, all of a sudden silver was on the run. And that was a fun time.
It's
Like
funny. The trade behind silver from the public always seems to be the same one that gets them into the ODTEs, where they think, well, silver's cheaper, so I can buy more of it, right? And if it gets to gold's price, then I'll have made a fortune. Where they somehow think silver is going to be worth $2,000 an ounce, and it's not.
I got a quick question for Carley too, and then you too, Bobby. We talked about drawing all the gunslingers in with the 0 days to expiration, but there is the chance that some of them, everyone comes in, thinks they're going to rule the world and gets smacked right in the nards. But anyway, the point is,
I just love it.
There's a long story behind that, Carley. But anyway, so the point is that if some of them can learn a little bit about how to use risk mitigation tools and take that on for the rest of their life, if they're doing it when they're 22 years old, there still may be value in that, correct? I mean, we're not teaching these things for just bullshit reasons, are we?
I hope not. I'd like to think no. To be honest, I think even if somebody decides to trade futures or whatever it is they trade and they blow out, but hope if they learn some valuable lessons on risk management that they can take throughout the rest of their life, then I consider that a win. But obviously, hopefully, the thing is, the markets can be anything people want them to be. You can use them as your slot machine, but you can also take it easy. You could remove the leverage from futures contracts by simply overfunding your account, trading micros. Like for example, if you have a $20,000 account and you trade one gold micro, zero leverage. So you can use them as investment accounts. You don't have to be a gunslinger, but unfortunately, human nature is it lures people into swinging for the fence, and they usually learn some tough lessons in between.
And human nature also leads people to be genetically predisposed to be bad investors, which is such a funny thing. It's always you want to buy things high and you want to sell things when they're going down, which is so funny because that I think is one of the great wrestling matches that go on in our heads, right, Bobby?
Yeah, definitely. I mean, I think my view on the 0 DTE is that it probably lost money in that it's worth more than a college education, where it's completely wasted money these days, right? Where they're just not learning any skill that gets translated into current business. But from that perspective, Carley, I want your one last opinion on something very important.
All right.
I think Jimmy should stick to the tight shirts because this is the only show who's ever looked as athletic as me.
What do you think?
Absolutely. Well, he's been lifting weights. I mean, it's clear.
No, he hasn't. He never does.
Brother, this conversation can go on another hour if you guys want to keep talking about it. Thank you, Carley, so much for being on. Tell them where they can find you.
You can find me at decarleytrading.com. It's DECARLEY trading.com, or if you're on Twitter, at Carley Garner.
One of
Thank
the
you, guys.
smartest, kindest human beings we have on the show.
It's so funny because Bobby and I have been on trading floors for 35 years. It's so nice and refreshing to just someone who is nice and calm and kind like you are. We love having you on. Thank you.
Well, thank you.
Jimmy.
You know, living in Vegas helps me out. That's why I don't live in Chicago. I wouldn't be like this if I was there.
Could be you'd be more like us. Well, thank you guys for watching Trader's Edge podcast. I'm Jim Uriel. That's Bob Acino. That's Carley Garner. Find her on Twitter. She's smart. You should be following her.
All opinions expressed by Trader Hub contributors are solely the contributors' opinions and do not reflect the opinions of Trader nor its affiliates and/or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Trader nor its affiliates and/or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be a financial or investment advice. Trader Inc. is the parent company of Trader Brokerage Inc. Trader Brokerage Inc. and Trader Inc. are separate entities with their own products and services. Securities products and services are offered through Trader Brokerage Inc. Trader Brokerage Inc. is an independent subsidiary of Trader Inc., all rights reserved, member FINRA SIPC.